Welcome back to Letters of Intent, the podcast where we explore decisions, commitments, and turning points that shape businesses and the people behind them. Today's guest has spent decades helping founders, investors, and decision makers answer one deceptively simple question: what is the business really worth? Today, we're joined by Stephen Bethel, a seasoned business valuation expert and brokerage professional who's worked across countless transactions and has a wealth of insight and experience that he's going to share with us today. And along the way, he's learned that the value of businesses is rarely just in the numbers, and there's a lot more to actually what it means to value a business. Stephen, welcome to the show.
Thanks very much. Thanks for having me.
Yes, wonderful
Stephen,
to have you here.
We are so excited to have you here. This is a question that comes up all the time because value is in the eyes of the beholder. Often we want the value to be low in the eyes of the IRS and very high in the eyes of an M&A buyer. So we're going to get into the business that you're in, which is a critical component of what we do and the outcome of what most of our small businesses want. They want an exit. They want to cash out. They want to know what they're worth. But at the same time, one thing that we're really interested in at Carbon Law Group is what personally drives the people that we're connected with and work with. So I want to take us back to where you grew up and what your early influences were. And if you could tell us kind of how that led you to where you are today.
Well, it's that's going to be an interesting question. So I grew up in Orange County. My dad always made sure that I actually worked for my money. So I actually worked at McDonald's and I worked as a bricklayer, did a lot of different things. And so even though I look like I got a tie on it, I still lay brick on occasion, things like that. Still dig my own ditches. But I went to Occidental College and I did my undergrad in economics. I was originally a chemistry major. I went on to do a master's degree in international finance and won a European business over in St. Andrews and also in Glasgow University. Came back and it was probably like 1988 and I was to get into finance. So I worked as a controller in manufacturing for about a year and a half, about 15 hours a day. So I was getting burned out. So back then they didn't have the internet. So I said, well, let's go to the library and see these books on careers. So I looked at that and I said, wow, look at this. Something actually called appraisal. Oh, that's pretty interesting. Oh, but they actually pay you to put numbers on stuff. So I was like, wow, that sounds really good. What's the catch? So I did that. And I joined a group doing evaluations of businesses and commercial real estate. And then I did that for about 7 years, started my own business. And then I started writing books. So I started writing books. One was on business valuation and how to sell a business and also brokering something. I eventually, wrote 10 books and I started doing reviews for the IRS. So that led to other things. And then I just slowly grew my business. Recently, I had a couple of interviews on NPR's Marketplace and Bloomberg. And so anyway, just on various, trends in certain industries and things like that. So right now I'm in the US Bank Tower and we have an office in San Francisco and also here in Los Angeles. And we do brokerage of businesses and commercial real estate, as well as actually the valuations of all those things all over the United States.
You make that journey sound very simple, but as people who work with business owners and who have been business owners, it can't be that simple. Can you tell us a little bit about a few trajectory moments in your career, something that kind of really changed the game for you?
I don't think there's any one moment. I think it's really all about your background and how you grew up. I'm a big believer that you need to have structure in your life, and you have a lot of times you get kicked in the face, fall down. You got to get back up. I've seen a lot of people who, let's say, were straight A students. They did great throughout their whole life, and then they got out and they just said, "Oh, I'm doing terribly." So every day I get up at about 4:30. It's kind of like those habits of successful people: get up early, go to bed early. Do all the stuff you're supposed to do. So I don't think it really gets more complicated than that. And if you just literally say, "Well, I'm going to do this," you sort of go back and say, well, in order to get here in 4 years, I need to do all these things now. So it just sort of slowly gets to that point. So it's kind of it's like Thomas Jefferson says, the harder I work, the luckier I get, right?
That's right.
Absolutely.
I love that. Do what you're supposed to do. I think that's a great insight here for our audience.
Yeah, absolutely. I love that. So since you are an expert, you've written many books, you're looked to by big media networks to comment on valuation. Tell us a little bit more about when businesses come to you to understand valuation. How do people value a business? Or are there different ways of valuing a business? How do you generally approach or guide clients or businesses when they're looking for a valuation?
It really depends upon the business. It depends upon the assets they have and everything else. But in general, it's usually some sort of multiple of EBITDA, or it's based on a discounted cash flow. It really sort of depends upon that. That's super, super simple. Then you have issues that come in like, well, what's the quality of the financials? Where is it located? Are you in a secondary market, tertiary market? Are you primary market? Are you in a gateway city? Makes a huge difference in the multiples. What's the concentration with respect to the sales? Are you getting all your revenue from, let's say, 80% from one client, or is it basically diversified? So then your sales should not be greater than 10% for any one client. in general.
Mm,
So
yeah.
that kind of makes a huge difference because in a lot of cases, people will say, well, all right, we've got the financials, they look really great, the profit's great, but you're getting most of your business from, let's say, one client. So what if they disappear? So
Yeah.
I mean, we can talk all day about all the different things that go into that.
So,
Yeah.
one thing that comes up often with our clients is the question of early stage. People are often paying nominal values to become founders in a company, and you're dealing with the value of the company in the eyes of the IRS versus which you want to be low compared to the value of the company when it comes time for sale. You want it to be high. Can you talk a little bit about how value can be relative or if it should be relative in your eyes? Are people making a mistake by using relative values? Is there an absolute value to your business?
Oh, it's absolutely huge in a lot of cases. So I think what you're trying to say is when you're actually reporting to the IRS, how can that actually then turn around and transfer those same numbers to a potential buyer? And you can't because if you go around and say, oh, I've got really about a $500,000 in ad backs, people are going to say, 500,000. If you're screwing the
Yeah.
IRS, I mean, maybe I'm going to get screwed too. So a lot of
Yeah.
times they say, I don't know about that. First thing we do is we say, take your numbers, have them recast and actually restated by some sort of bookkeeper or CPA. Put that on letterhead. Okay. So when it looks good, people say, oh, I feel much better. And then at least it looks like everything is better than just literally saying, hey, here's something on the back of an envelope, or here's some financials that look like I'm making a loss for the last 5 years. If you sell that to someone, they're going to say, I personally can't market that. I can't sell
Right.
that business. So I always tell people at least 2 or 3 years in advance, start paying your taxes, or, because everyone looks at it as basically a private ATM. They say, oh,
Right.
well, I'm just going to basically run all this stuff through the business. It'll be great. But then when they say, oh, but on the flip side, I also want my cake and eat it too. And I want to basically say, I want a maximum value of a row. And you're like, no, 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 no. It's not going to work that way. You can't have it both ways.
Yeah, so I think that's a critical insight because that's something we see a lot too when we're working with M&A clients, especially single owners or few owners of businesses that have been running for a while and they've run everything through it. We're seeing that with veterinary practices and different types of practices. It does shoot you in the foot when you're trying to sell it. So I think it's really important to think about that early on because otherwise, yeah, you could be putting yourself in this tough spot if you're trying to
Sure.
sell.
Absolutely huge. Another thing is if they own their own real estate. So in a lot of cases, you'll see a situation where you'll have a guy who, let's say, he pays himself $1 or he doesn't pay himself, whatever the market rent is, he pays it way below that. And I
Right.
was like, oh, my business is worth all this money. And he said, no, 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 no. You own the real estate also. So you're actually, your cash flow, your EBITDA looks higher, but it's actually lower. You know what I mean? That makes
Mm,
total sense. One time,
Right.
tell you a funny story. I was down buying some socks in Newport Beach and I went to this men's shop and I said, oh, tell me what's going on. And he was telling me a little bit about his business. And he said, what do you do? I said, well, I do valuations and I sell businesses. He said, well, what's my business worth? I said, well, I don't know. What's your cash flow? He says, I take home about 150,000 a year. I said, oh, that's great. I said, what's your rent? He says, don't have any because I own my own building. Oh, it's
ah,
good. Well, I said, well, how much would your rent be if you had to pay? He says, about 200,000. I said, well, you don't have a business. He says, what do you mean? I said, well, if you actually were to go out and pay
Yeah.
rent, I said, and anyway, long story short is he was like this. He's like, oh,
Yeah,
and
that's
then
a
what
great
happens
point.
is like 3 months later, I'm driving by and it says for lease. And I guess he
Yeah.
just
oh
shut it
wow.
down. So I was like, oh man. So these are
Oh
things
wow.
that I think that's really important to kind of go over. I'm actually going to do a YouTube series on just all the pitfalls you can have when you actually are looking to buy a business, like inventory counts, financials. I mean, on and on and on, stuff like that.
Yeah.
That is so interesting. I love that question. Like, do you really have a business? I like that because we've got people who just are looking for cash flow businesses, but then we have people who are looking for exits. And in between, where someone is debating, okay, well, I have got this cash flow business and now I'm deciding that, well, I want to sell it. And like you're saying, you probably need to be prepped about 2 to 3 years in advance in order to make that happen. I
Mhm.
think that's critical insight. And I would love to
Yeah.
know also when we're talking about multiples and valuations, how do you determine what the multiple is when you're talking about, let's say, a professional services business versus a
Like an
real estate
AI
company
or
versus
like an
tech
AI.
or,
Yeah,
yeah,
yeah, because you're seeing
where
crazy
does this come
multiples
from?
in
We just
tech.
hear, oh,
Yeah,
okay, this should be 2x or like and then you've got other companies who are 10x or 100x. Like, where does
yeah,
this come from?
Well, part of it is actually based on transactions. You can see that basically in the comps. And a lot of times you can just look online and say, well, let's say, what's a drug rehab center going to be selling for? Well, the ranges between this is, but it doesn't always mean that, price doesn't always equal value. That's another thing. So people always say, oh, well, I'm going to ask $3 million. You say, well, that's really great. But, the value is probably maybe less, and maybe the transaction value is less than the actual appraised value because of whatever reason. Maybe it's got issues, things like that. But a lot of people look at, let's say, publicly traded companies, and they'll say, "Oh, well, I'm similar." No, 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 no. It's much different. Also, portfolio size. Let's say you've got, let's say, a McDonald's. having one McDonald's versus 15 McDonald's are totally different. So your multiple is going to be different. Let's say you've got a fast food restaurant and let's say the multiple is, let's say three, three and a half, four times, plus or minus about three, three and a half. And then you've got, let's say, a portfolio. Well, that might be more like 5 to 5.5 times because you have synergism. You've got, let's say, 50 different locations for the business, things like that. So it really depends upon each particular location. Also depends upon how long the lease is. So in some cases, you've got leases which are really low and I'm sorry, short. And as a result, let's say a retail business. Well, if that's not going to get renewed, you really only you have more of a discounted cash flow. Your business is only going to last for a certain amount of time and for 4 years. Now you might be able to move, but the issue is you're going to have a problem with respect to your revenue streams. So I find whenever people move, they have about a 20-25% discount on their revenue stream for the next 2 years until people find, because you drive down you're like, oh, where's Joe? Oh, it's not here anymore. And then you say, oh, I'll go find another person. So it's things like that.
That's interesting. Understanding the effects on value if you have to move your business and how that factors in to even lease negotiation and things like that. Yeah, fascinating.
And so you were asking also about how getting your business ready to go. So it's kind of like getting in shape to go get married or something like that. It's like,
Right.
all right, hit the treadmill, got to look good, you got to shave
gotta be
up, you got to,
attractive, yeah.
you got to look attractive.
That's
It's like,
right,
it's selling a car. It's like, okay, well, I got to make sure there's like a lot
Yeah.
of wax on there. It's looking good. And you don't want to walk in and be like, oh, this place is a complete dump.
Right,
Everything's all screwed
right.
up. And you know what? When they bring their wife, this is what always happens. They go into the restroom and they're like, what the heck's going on here? This place is an absolute dump. And then
Right.
they say, well, what? I wonder how the financials are too. So there's a lot of stuff that you just don't see. It's more of a psychological issue as well. So I'm always a big believer in basically cleaning everything up, making sure the financials look good, everything looks tight, the numbers are all drilled down, all the documents that you need are all laid out. So when someone says, well, okay, can I have your lease? Sure. Here you go. Can I have this? Sure. No problem. Can I have a list of your inventory? Yeah, boom, boom, boom. Things like that. So these are all important things. How about a list of your contracts? Are these contracts that could be actually transferred? Maybe not. Things like that.
So, could you give us an example of what are the situations where a business owner who could be one of our clients, an operator, an entrepreneur, would need a valuation? Are there some situations where we could explain to our audience, okay, these are places you should anticipate you are going to need a proper valuation?
All the time. First of all, you
Yeah.
can do it either for financing. You can do it actually for selling a business, or you say, hey, you know what? You think your business is worth 5 million? Yeah, well, actually, it's worth 7 million, or no, it's worth 5 million, or it's worth 3 million. You don't know sometimes. Or let's say you've got a membership or a partner buyout, or you want to bring, let's say, debt in, and you
Makes
want
one
to bring
on.
some shares to new owner, or maybe someone wants to cash out. So hopefully there's a buy sell in place, and you can actually follow that and go for something like that. If not, then you might have one of those, let's say, Section 2000 cases where you've got to actually then go through the court system to actually just liquidate the whole business. But valuation, when people die, you've got a minority interest. Sometimes, let's say you've got like percent interest in a business, or you've got various sorts of interests, things like that. Also, if you go through probate court, same kind of thing. You need to have these valuations done either on the businesses, the real estate, all those various things. So it's absolutely critical. It runs everything. And
Right.
if you're a valuation person, you are the filters of fairness.
I feel like most small businesses are kind of winging it on valuations when they're founding companies and issuing shares. At what stage do you see businesses recognize I need a professional valuation and they're willing to spend the money on it?
I think when you start going above probably about 15 employees, probably 10 to 20 employees or more, people start saying, hey, I need this for whatever particular reason. I'm going to cash out a shareholder, or I want to take someone in, things like that.
Yeah, interesting. I think also people, if they're creating like stock option plans or employee incentive plans, they need to think about valuation there. Strike prices, there's 409A requirements. So these are things that people should definitely be aware of if they're growing a company, trying to issue shares to different
Absolutely.
parties. Stephen, I want to make sure we have time for you to get into some of the interesting deals you've been working on too, because from our conversations, you have a wealth of obviously experience. You're working on different deals. And are there any kind of highlights or interesting deals you worked on recently that are worth noting?
Well, yeah, and I can't really disclose too much, but I guess I'd be probably more interested to tell you the deals that I'm not working on. So I'd
Okay.
say probably in the last, I'd say 6 weeks, I probably had 5 to 7 businesses that wanted to sell, and their numbers were so messed up. I just said, I can't even do anything with this because they wanted something that was so high. I said, I'm sorry, I just can't help you because it's just a complete waste of time from that standpoint.
Interesting.
So we're working on a couple of businesses right now, and the issue comes down to, let's say, how much is their inventory worth. So there's one of them right now that we're working on, and they have about $5 million of inventory on the books. And I said, well, is this market inventory? They said, well, it's actually worth more than that. I said, well, you're going to have a buyer who's going to look through this and say, well, okay, we're going to count everything and see if it's really the last season's, it's basically clothing. The last season's inventory, or is it, you know what I mean? Is it really even marketable? So in a lot of cases, sometimes you'll have situations where, let's say 80, 90% of the inventory is not worth much at all. It's just, it's like legacy inventory. It's been sitting there on the books for, let's say 15 years. So that you just see situations like that. But so there's another thing we're working on right now. So we're doing some student housing. We're working on a large deal over in near the USC area. That whole area is oversaturated. So I think you're going to see a bubble pop in that particular market. What we've seen in the commercial real estate property, just to jump from, let's say, businesses to commercial real estate, is the buyer pool has actually shrunk. It's shrunk by probably about 70%. Most people just kind of sit on the sidelines. Everyone's thinking there's going to be a huge jump within about 18 to 24 months. I don't know that's going to happen, but no one's really fighting to get in a deal. So it doesn't seem like it's perfect for me. You know what I mean?
A huge jump is in like a crash of like the
Let's say
prices,
a crash,
or
but definitely coming down about 25 to 30% as a minimum.
interesting on commercial real estate.
Commercial real estate, correct? Yeah.
Interesting.
And I mean, look, you just drive around and you can see that in the industrial buildings too. You've got negative absorption happening everywhere. People just move. Negative absorption means when you're actually, there are more people moving out than moving in. So you'll see the vacancies start to grow, which means, let's say you go to the city of industry, right? And you'll see people just slowly leaving because they say, oh, it's too expensive. You got some of these rents now, they're basically for industrial, they're the same price now that what you'd see in, let's say, retail like 15 years ago. So that's why people are saying, well, I'll go out to the Inland Empire and other places that are a lot cheaper.
Yeah, interesting. That is fascinating. Yeah, to see kind of what's happening with the market. And you're right. Yeah, I think since COVID, right? I mean, have you seen lingering effects from COVID on commercial real estate in terms of just because that had a huge impact on it? How do you think that plays out?
Okay, so I'm here in the U.S. Bank Tower, so you can probably see right out here. So
yeah, we were there too, actually, for many years. So we were on the 26th floor.
Right, so you know the drill. It's a ghost town down here. Everyone says, "Oh, it's coming back." I'm like, "It's super not coming back." I've been here since '95, so that's about 31 years. It's not coming back. I mean, because for example, at 71 above, they just closed that for lunch, right? So it's
wow.
I mean, they're still open for dinner and stuff, but it just shows you nobody's coming here to actually do work. And so you see a lot of this, like, oh, well, I'm going to work from home and things like that. So. And you'll see this in some of the other major metropolitan areas. It's like Dallas. I just heard that, AT&T just moved out. They're going to move to Plano, I think, because they don't want to be in downtown Dallas. You think, Dallas, come on, it's totally happening. No, not in downtown. Same thing in D.C. and a lot of these other places. So office is definitely getting hit because of COVID. You have a situation. Retail's done okay. Okay, so apartments done pretty well, but apartment rents have actually come down probably by about 10%, 15% just in the last, I'd say, 12 months. Because so many people have actually left California. You see this basically high supply, lower demand. And then finally, industrial was totally kicking ass from about 2020 till about 2023. Everyone was like, industrial, you can do no wrong. Well, that's actually completely reversed because of the ICE raids and everything else. And people, because of the increase in the minimum wage, everyone's like, I don't know, I can be somewhere else. So that's kind of what we're seeing. So I still think it's got a bit of time to kind of work its way out and just slowly have the prices sort of readjust.
Yeah, fascinating.
So what are the hot industries for you right now? Without kind of going into any details on any clients, are there some industries that you're seeing a lot of activity for?
Sure. So car washes are pretty hot. I mean, just from a real estate standpoint, any type of simple business. So remember, the simpler the business and the dirtier the business, the better it is. So pallet business, porta-potty business, solid waste, things like that are actually very easy.
It's like non-sexy, simple.
Non-sexy, exactly. So I told my daughter about 15 years ago, I'm like, oh, you should be like a McDonald's baroness. This would be really great. Well, I mean, who would have known that basically they're all kind of floundering around the United States right now. We just did a portfolio of about 390, I want to say the name of it but basically pizza businesses, and they're just not doing well. You think, well, pizza, come on. I mean, that's got to be great. And so you're seeing a lot of fast food restaurants around the United States just not do that well. There are other things you can get into also. So there's something called a cost of occupancy, which basically says you should be paying no more than a certain percentage of your gross sales. So for example, if you have a fast food restaurant, they say you should pay more than 10% of your gross. It's basically rent. So let's say you take your rent and you divide that by your gross sales, that gives you the percentage, right? So in some cases, they're now going 10, 11, 12%. So they're losing margin from that standpoint. These guys are getting absolutely crushed because the cost of occupancy is going up, the labor costs up, and also the inputs for food and everything are going up. So that's why you're seeing some of these cuts come down in quality. Anyway,
that's interesting.
Yeah. How do you deal with sometimes intangibles. You've got real assets, you've got property, you've got buildings, you have even inventory, which, like you're saying, is it's interesting. I mean, depending on the industry, it could be an asset or it could be a liability. Like you're saying, if you've got these outdated, antiquated kind of garments in a warehouse, that's a really interesting situation where the business owner is seeing something as an asset, but you, knowing the market, are saying, actually, this is not going to improve your valuation. It will actually do the opposite. So, my question is, how often are the expectations of a business owner different from the actual market reality?
I'd say probably 90% of the time. No, I'm really serious. I'm really serious.
Yeah.
Most owners think that everyone thinks their house is worth a whole bunch, right? Like, oh, my house is amazing. I've got, let's say, 9 bathrooms, a 2,000 square foot house. You're like, yeah, well, that's a lot of bathrooms. You're like, oh, well, whatever it is. My business is different. My neighborhood's different. My city's different. You're like, yeah, well, maybe not. So I think it's basically universal that they all think it's worth a lot more than it is. Because at the end of the day, you've got to have sales. It's got to be diversified. You've got to have things that actually continue to go real well. In some cases, you don't have a staff that actually takes over when you go on vacation. So these are all sort of things. It just depends upon your staff in place.
And what's the hardest thing to value? What's the most intangible kind of goodwill? Is it a person? Is it one time I heard President Trump say he values as businesses based on how he's feeling. What's the?
I don't know. I can't comment upon him. But
no, not on him. But
I mean about his comment because I don't know. I don't know. But I mean the hardest thing to value is really the business that with respect to, let's say, a key man. So let's say you've got one person that drives all the value. Well, what if that guy has a coronary or something like that? So you want to make sure you've got insurance on something like that. Other situations would be some sort of intangible. So for example, some people say, I have all these patents. You say, well, for example, I just had a company. They wanted to sell. Their sales were down 50%. And I said, do you want to sell? They said, no, I want to have this number. I said, those are the numbers pre-COVID. Yeah, that's what I want to sell for. I said, no, you're down 50%. I can't get you that. Oh, but I have like 5 patents and this. I said, it doesn't matter. If you had those patents and they were totally kicking ass, that would show in the cash flow. It's not showing in the cash flow. And I hate to say this, but you got to just kind of break it down for people and say, I'm sorry. I can't sit there and say, well, maybe. Now, a lot of brokers will say, well, let's just put it on the market. We'll see what happens. I don't want to waste my time. I'd rather go to the beach.
Yeah.
Right.
I mean, we all would, right?
But what about these pre-revenue companies, software companies? Like, how do we deal with that? People who don't have any cash flow.
All right. So that's a topic for probably another time. But
we'll save that.
I've seen a lot of software companies go nowhere. And sometimes it might do great, but a lot of times it doesn't. And for example, we've got space up in San Francisco, and all these unicorns were all kicking ass in the last 15 years. And then when the interest rates went up in the last, I don't know, 2 years ago or something like that, these guys just fled the whole city. I mean, it's a mess up there. I mean, there's so much office space. It had all these unicorns up there. They didn't make any money at all. And so I think it's very rare to have some of these people break out and do really well.
Yeah. It's almost like hot potato, I think, with those tech companies,
absolutely.
right? Because they get so much money thrown in by the VCs and then try to just flip them until
well,
yeah,
realize,
I
mean, did you guys see all these things? Like, oh, I'm a disruptor. I'm going to sell diapers to households. And when you drive home, you're like, is that really a disruptor? I don't know. I mean, like, give me a break. You know what I mean?
Yeah.
But you see, you saw all that stuff in the last 10 years. And so anyway, going back to your question about software, I don't know. If they have something where everyone's like, oh, this is really, really amazing, and they really do have sales and everybody's on board, and it looks as though they're going to start doing well. But a lot of cases, it's like, oh, I haven't made money in 4 years. We're going to break even in 2. And you're like, maybe, but I don't know. I mean, but it's like, well, where are you getting all your money? Oh, well, it's a VC, or our burn is, whatever it is, this much. And you're like, okay, I don't know.
Yeah, that's a tough sell.
So anyway,
yeah.
I don't know that answers your question.
Definitely. Yeah, of course it does. Yeah.
I think it's a great insight. I mean, it's definitely things for people to think about, and also recognizing that software isn't always as sexy as people think of it is. You see these stories in the media, but realistically, when you're VC backed and you're just spending money, it's not always easy to make that sale. So you still have to have the fundamentals right. And I think that's why going back to those simple, not sexy businesses that,
I'm a huge believer in that. It's like the liquor store over in, the college town. It's things like that.
Yeah. So, Stephen, I think we're going to make this obviously a series. Just based on our conversation today, there's so much to go over. Given your wealth in what we do also on the kind of the M&A corporate transaction side, I think this is a great conversation we can continue that will, I think, be of a lot of benefit to a lot of our listeners. So with that said, we have a kind of a short rapid fire round of questions that
Sure.
really just get us to know you a little bit better and also provide some insight for our clients on resources that maybe they could look at. So the first question would be, what is a book that every entrepreneur should read?
They should have a basic accounting book.
Okay.
I mean, everyone should have a basic accounting book. I know a lot of people that run businesses and they don't know accounting. I'm like, you got to be kidding me. You haven't had a basic accounting? No, I have my
Yeah.
bookkeeper do that. Those guys always get nailed. All right, go ahead.
Yes, absolutely. Okay, so basic accounting is critical. Okay, what's a belief that you've changed your mind about over the years?
Well, Franklin says you should be liberal when you're young and actually more conservative when you're old. If not, there's something wrong. I guess I'm
Yeah.
getting more liberal as I get older sometimes about certain social issues.
What's a habit that keeps you grounded?
Exercising and helping the poor.
Okay, well, I'll definitely talk more about that. Sahil and I have
And also, sorry, jump in, digging ditches.
digging ditches. Okay, I love it. I love it.
Interesting.
Getting your hands dirty.
Yeah, I mean, I love to garden, so
Yeah.
it keeps you focused.
That's awesome. That's awesome. We'll have to chat about that too. Yeah, I have landscape our whole backyard, so I was thinking about doing it myself, and now I think you've inspired me to take some of it
You
on
can do it.
myself.
I'll talk to you later about some other stuff, but go ahead.
Okay, and then what does success mean to you today?
It doesn't really mean money. It really means, are you successful in your health, successful in your family? Are you still married? I mean, obviously, it doesn't always work for everybody, but there's a lot of
Right.
stuff. It's the basics. Did your kids grow up okay, or are they just spoiled? Things like that.
Right.
Are
Right.
you respected by your community? Because not everything in life is money.
I think.
And do you have
I think
good
absolutely.
morals? A lot of people say, "Oh, I have good ethics." Sometimes ethical things are not really morally right. You're like, what?
Right. That's so true. So true. There's definitely a difference between ethics and morals. I think for another conversation, I think we can get into the philosophy
Absolutely.
of business episode 2 for sure. Well, yeah, this has actually been fantastic. Really always enjoy talking to you, Stephen. You're a wealth of information. I know, we're going to be working together in the future on a lot of different deals. I can't wait to do more of that in this year ahead. We've referred to you, many of our clients who've been always happy with your level
Thank you
of
very
service.
much. I really appreciate it.
And you're always our go-to for valuations for clients. So if anyone's out there looking for a valuation of the business or just wanting to understand more, Stephen's just really great resource to have. And yes, go ahead, Sahil.
Oh, yeah. I was just going to say, well, on that note, if people want to get in touch with you, Stephen, how can they do that?
They can call me at the office at 213-439-9956, extension 102, or they can look it up on it's Frazier Capital, spelled Frazier, and that's capital.
So we can add that in the show notes. As always, it is a pleasure to have all of our listeners join us for these wonderful conversations. Stephen, thank you so much for spending your time with us today.
No problem, Sahil. Pankaj.
It was entertaining. It was educational. I know my favorite line today was just do what you're supposed to do. I think we've gotten really far away from that. And it's nice to have a voice that's just grounded in some of the simple basics that have created success over generations, the tried and true methods. And so
Yes.
I think it's nice to have a voice for that and just keeping things practical, common sense. And we cannot wait for our next conversation. Thank you so much, Stephen, for joining us.
All right, sounds good. Have a wonderful rest of the day.
Thank you.
All right,
too.
guys.
Thank you.
Bye.